Welcome to Accounting Way YouTube channel. Today we are going to start our accounting basic tutorial season in first video, accounting basic. Okay, let's go to lesson. Firstly, I ask some question. Is there an easy way to remember what goes to debit or credit in accounting? Answer is yes. The easiest way to remember debit and credit is ADE LER. In this video, we discuss how DCADELER is work with examples, so you actually understand what is going on. You will see that there is a big difference between memorizing and understanding debit and credits. The starting point is where is the normal balance of an account. DC at LER tells you debit on left side, credit on right side. ADE is on the debit side on left, assets, dividends, expenses. LER on the credit side on the right, liabilities, equity and revenue. Instead of dividends, some people use the broader terms drawings. Debit and credit are fundamental to accounting. To understand DCADELER, you need to go step by step. Okay, we start off with half of the term. Focus first to understanding the accounting equation. A equal L plus E. Asset equal liabilities plus equity. This is sometimes also called the balance sheet equation. This is equal balance sheet. So now, assets are things that a company owns. How to assess increase? How to assess decrease? The normal balance, we are talking about an assessed. Okay, the normal balance of an assessed account is debit. Assessed accounts increase. We can identify assessed account increase by recording more debit to it. Debit decrease by recorded credit to it. And here some example. We think this T ledger is inventory. The goods that you sold, the goods that you hold to sell is an assessed account. It has debit account balance. We guess balance 1000. This is the amount owned. During the account period, the company receives additional inventory. Receives 500. Due to the transaction, inventory goes up. The debit balance increase. Duration of the account period, the company shipped prior to customer for issued 300. Due to the transaction, inventory goes down. The credit to the account pull the balance down. At end of the accounting period, $1,000 debit, opening balance of 1,000 debit, at receipt of 500 debit, and deduct outgoing shipment 300 credit to get the new account balance 1,200 debit. Now we are focused for second point, liabilities. How to liability increase and how to liability decrease. The normally balance of the liability account is credit. Liability account increase by recording more credit and decrease recording debit. Okay, example, we guess payable account payable, invoice received from a supplier that the company has not paid yet. It is a liabilities account. This is a liability account. It has credit balance. We guess balance 2,000. Okay, this is the amount owed. During the accounting period, company received new invoices 500. Received 500 invoices. Due to this transaction, account payable goes up, the credit balance increase. You can see now it. During the accounting period, the company makes payment to suppliers for payment made to suppliers 700. Due to this transaction, accounting payable goes down. The debit to the accounting pulls the balance down. You can see now it 250, 2050 and 1800. And end of the accounting period, you take the opening balance 2000, credit, add to invoice 500 credit and deduct 500 credit and deduct payment to suppliers of 700 debit to get to the new account balance of 1800 credit balance. 1800. Look at this both example. Now you know we discuss about assets for example and liability for example. Look at this both examples. The number was one number was mentioned in both example, 500. You can see this 500 and this 500. The inventory that was received during the accounting period was not paid for immediately. The company received the inventory as well as an invoice from the supplier. The journal entry for this, we can create journal entry. Now you can see inventory debit 500 and account payable supplier personal account credit 500. So every transaction has debit and credit, and it at least two accounts are affected. For each transaction of total of both debit equal of all credit. That's mean always debit equal to credit. Okay, I think you will get some idea about basic. And now for the second half we talk about first half. Assets equal to liability plus equity. Now for the second half of the DC-8 concept. Okay, we can focus about second half. For this you can see full lap we always talking about assets and liabilities. Okay, the other three letters that we have not covered yet, these three that have not covered yet, are all connected with equity. These three connected with equity. Equity is also called V shareholders capital. This is same shareholders capital. In a way, this is the amount owed to shareholders. Main driver of income in most companies revenue. Normal balances for revenue is credit. This is directly connected to the fact that if companies earn revenue, then the shareholders benefit from this and equity goes up. Therefore, earning revenue, equity goes up. However, in order to earn that revenue, companies incur expenses, cost of sale, operation expenses, like that. The normal balance for expenses is debit. This is directly connected to the fact that if companies incur expenses, then the shareholders get hurt by this and goes down. If revenue goes down, expenses and equity relationship, when expenses increase, equity goes down. Okay, now if revenue are bigger than expenses, it's make profit and equity increase, and revenue are smaller than expenses, it make loss and equity decrease. Now we identified expenses and revenue. Now profitability company could consider paying a dividend to shareholders, a distribution of the profit. This would decrease equity. When dividends increase, equity goes down. As the normal balance of equity is credit, a debit dividends would reduce it. Debit and credit always equal. DCADELER. This is a tips for easily understanding accounting foundation. So today I'm going to stop today's video. Get your memorize. I will be think you get some strong knowledge about or some idea about accounting basic and how to behave in accounting foundation. We will meet in next video. Thank you.